It's time. Yesterday, I took 2 trades and 2 losses. Today, I took 2 trades and 2 wins. Alright, let me break these down. That's how it goes in trading. Sometimes you might just lose 2 in a day, and then the next day you win 2 in a day. It's crazy, it's crazy. Okay, the first trade, Euro USD. Let's break this down real quick and simple. I'm bullish on Euro USD, same as yesterday. We have this daily imbalance right here. We've raided the previous daily low, and we've taken out SMT. We've created SMT. Oh, let me go down here. Sorry. We have this daily sell side imbalance. We closed above it and used it as support to trade higher, closing above this short-term high right here and creating a daily imbalance. So to me, this is bullish up until this high and also this high up here potentially if price wants to trade there. So I'm bullish on Euro USD. Going down to the 1 hour time frame, this is where price really convinced me that it was bullish. This is the range. We have this swing low to swing high, and we've retraced down into a discount of this 1 hour dealing range, and we've tapped into the daily fair value gap by raiding the previous daily low. We've created SMT, which is imperatively important. This is the down close candle that raided this short-term low. Now, when this candle got closed above right here by this next bullish candle, that is a 1 hour change in the state of delivery right there, which is a very bullish sign. And you can see price used it multiple times, failing to even close below it. See how we closed above this orange line every single time? We never closed below it. Price is using that as support to trade higher. That is the change in the state of delivery. Order flow has now gone from bearish to bullish. This is the smart money reversal. And at the smart money reversal, we want to have SMT, and we did. So that's a big tick right there. Now, it would have been nice to get in on the 1 hour time frame. Let me go to the chart real quick. It would have been nice to have just taken the trade like this from the 1 hour perspective, and you can target these relative equal highs, and you can take a partial at 2R, so it'd look something like this. Take a partial there at that green line, make it straight, and then yeah, something like that. That would have been nice, but I was sleeping because this was Asia session. I was sleeping. Well, actually no, I could have taken it during London, but I actually wanted to wait until New York to catch the continuation. So that's what I done. The 1 hour perspective, daily to 1 hour, we have the 1 hour CSD. Now on the 15-minute time frame, we have 2 SMTs as well, which is nice. We had SMT on these lows with DXY and SMT on these lows of DXY. We've used that 1 hour order block to trade higher. We've had this expansion now. And we've left behind this 15-minute fair value gap, this 15-minute imbalance. When price retraced down there, I was thinking I might want to buy right here with my stop loss at the 1 hour swing low. I was going to put my stop loss below that swing low right here, but I felt more confident with my stop loss below this low, because also that low is the low of the 1 hour candle. The first 1 hour candle of the fair value gap, which is this one, we'll mark it as purple. This is the 1 hour fair value gap. This is a 1 hour swing low, sorry. That was the swing low. And I felt way more comfortable with my stop loss below that 1 hour swing low. So that's where I put my stop loss. And I saw this 15-minute imbalance on the sell side of the curve. Price used this imbalance to trade lower. We retraced up in there and it pushed price down energetically. Now, if price closes above this 15-minute imbalance, I'm anticipating price to retrace down there and use it as support. So it's gone from being used as resistance to being used as support on the buy side of the curve. So if I saw close above that purple rectangle, I was very confident that price was bullish. So I bought right here, right in that orange box, and this is what I anticipated price to do. And we can see price did trade up to these relative equal highs right here, which is a very strong drawn liquidity. We closed above that purple box and used it as an inversion fair value gap. We also overlapped this with a buy side imbalance as well, which is even stronger. And this 15-minute down close candle was an order block. So we hit all three of them, the inversion fair value gap, the 15-minute order block, and the 15-minute imbalance right there. So we closed above there, retraced down, and expanded higher, leaving behind another 15-minute fair value gap. It doesn't look like we got in there from this perspective, but we did very slightly, like just wicked into that 15-minute imbalance. And we hit that 2R, that green line. I was going to take a partial at 2R. But price was looking just so bullish. I just wanted to hold the full position. I was like, yo, I'm confident price is going up to these relative equal highs. So I'm trying to just hold the position. Of course, by this point, I went break even. When price retraced down into this 15-minute inversion fair value gap and expanded higher, I trailed my stop loss below that short-term low right there. We have another 15-minute imbalance on the sell side of the curve that was used as resistance. Now on the buy side of the curve, I'm anticipating this to be used as support once again, just like this inversion fair value gap down here. And we did close above. Did we close above it? Yo, let me check that out. No, we didn't close above it with this candle, but we closed above the consequent encroachment, which is also acceptable, quite acceptable. If price is bearish, you don't want to see it closing above the consequent encroachment of that inversion fair value gap right there. And we wicked down in there, used it as support to expand higher to the relative equal high buy side liquidity. Now I said that was going to be quick, but that was actually kind of long. But I was very happy that I bought down here. I want to show you guys where I bought. This blue arrow right there is where I bought. Almost the very low. Almost the very, very low of that candle, like within 1 pip. I thought price might want to retrace down into discount of this dealing range. So I thought, you know what, maybe I should wait and buy it at equilibrium right here. But then I thought, nah, man, just get in the trade. Like, just get in the trade. Put your stop loss below here and you'll be good to go, even if it does retrace down deeper into this dealing range right here. So yeah, that was the Euro USD trade. I'm very happy with that trade. That was actually fantastic price action. And we could potentially trade up to this high as well. Now, that was my first trade. The second trade. Oh, and also I halved the risk. I forgot to mention. As you can see right here, I halved the risk, 0.24% risk, because yesterday I literally lost 2 trades. And I thought, you know what? Let me just halve the risk. Again, I just felt more comfortable doing that. The next trade, XAU USD gold. Gold is in an expansion phase. It's bullish. Gold has just been bullish for ages. Daily imbalances are being used to support. We're closing above previous daily highs consistently. So what are we expecting? Bullish price action for gold today. Now on the 1 hour time frame, let me actually go to the gold chart real quick. Because on the gold chart, we did have this 4 hour imbalance, which I had marked out, but I got rid of it because it just looked too messy. So the context of this trade is a 4 hour internal to external range liquidity move. That was the main idea behind this trade. We have this 4 hour imbalance, internal range liquidity, and the 4 hour swing high, which is the external range liquidity. But on the 1 hour time frame, I just thought, you know what, I'm just going to mark out this order block. This down close candle right here is an order block. So I thought it just looks way cleaner if I mark that out instead of having this big box on my screen. So I just marked this out. But just remember the 4 hour imbalance is there. So that's that 1 hour order block. We also had SMT with silver, which is very nice to see. This is the smart money reversal. We always want to see an SMT at the smart money reversal. We've expanded higher, leaving behind a 1 hour fair value gap. we've retraced down below this 1 hour short-term low, raiding it, sell-side liquidity has been raided, and we've created SMT within the 1 hour imbalance. When I'm seeing this, I'm like, price is absolutely bullish. We're trading higher towards this original consolidation, external range liquidity buy side target. So going down to the 15-minute time frame, we have the context, we have the key level. So now it's time to look for an entry. Once again, this short-term low has been raided and we've created SMT within the 1 hour imbalance. We have the relative equal high buy side liquidity up here, which is the original consolidation. This down close candle was the one that raided this short-term low. So when price closes above that down close candle, I'm anticipating that to be the change in the state of delivery, where price has now shifted from bearish to bullish price action. You can see we have this consolidation right here. This candle was the manipulation down into that sell side liquidity and 1 hour imbalance, creating SMT before the distribution higher to the relative equal high buy side liquidity target. So we've closed above not only this down close candle, but all of this price action. You see how energetic that move is, leaving behind two 15-minute fair value gaps. And this is technically a 15-minute breaker block as well. So it's technically a unicorn. A breaker and a fair value gap is a unicorn entry. Now, ideally, I get in at that 15-minute order block, but I was eating some yogurt and watching a YouTube video, so I actually wasn't on the chart, but it would have been so nice to get in at that 15-minute order block right there with the stop loss below the swing low, targeting the buy side liquidity. That would have been an amazing trade right there, but I wasn't on the chart. And when I checked the chart, it literally looked like this. And I was thinking, I need to get in ASAP Rocky because we are about to take off. So I bought just above that 15-minute buy side imbalance, that 15-minute fair value gap, still with my stop loss below this low because it's just way more safe. It's just way more safe. And I was anticipating price to retrace down into here, close above this down close candle, which will be a propulsion block because this is basically the order block that pushed price down into the first order block. So this is like the low risk buy. A close above this down close candle and a retracement into it would be the first stage of distribution, and then the second stage of distribution will occur somewhere around this area. I put that green line to mark 1-to-1. I was going to close fully at 1-to-1 to secure the profit. But once again, price was looking so bullish, and we did take out the external range liquidity, completing the 4-hour internal to external move. We did not get no retracement down into this propulsion block though. We just closed above it and absolutely launched off higher. Oh, and remember, there's a lot of inversion fair value gap action today because this 15-minute fair value gap here on the sell side of the curve got used as support on the buy side of the curve. You can see once we close above that candle right here at 10:45, the next candle 11 pushed down back into it and then traded higher. And then once again pushed back down into it and then traded higher to the buy side liquidity right there, completing the move. So that's literally two very nice trades. I'm very happy with that. This is gold. And this is Euro USD. Fantastic stuff. After taking 2 losses yesterday, 2 wins today, I learned you can never really get too happy about winning and too sad about losing. Because if you win today, you're probably going to lose tomorrow. And if you lose tomorrow, you're probably going to win the next day. So that's pretty much it. For the week so far, 5 trades, 3 wins, 2 losses, plus 1.34%, plus 5R. This was so long. I want to make the videos quick, but it's just so hard to do it quick because I've got these pictures here to explain, but I always just want to go into the chart and actually break it down. I prefer doing it like this on the chart, you know. Like I prefer actually going on the chart instead of using pictures and just marking it out like, yeah, so this is what I'm seeing. Maybe from now on I should do it that way. But yeah, that is it for today. Very great trading day. Tomorrow, let's check out the news. What's going on? We've got some PMI and stuff, right? Yeah, loads of European stuff. PMI, PPI, not PPI. Oh yeah, it's PMI day. It's just a PMI day. I don't know what PMI is, Price Manufacturing Index. There's just loads of PMIs going around tomorrow. So yeah, that is it. We'll see. Last trading day of the week. Hopefully, I'll be able to catch something real nice. But that is it for today. Bang! 2 wins. Come on, boy.